Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Widespread fear is your friend as an investor because it serves up bargain purchases. Whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down. We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. You can't produce a baby in 1 month by getting 9 women pregnant. Someone's sitting in the shade today because someone planted a tree a long time ago. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. When we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever. An investor should act as though he had a lifetime decision card with just 20 punches on it. It's better to have a partial interest in the Hope Diamond than to own all of a rhinestone. In the business world, the rearview mirror is always clearer than the windshield. One thing that could help would be to write down the reason you are buying a stock before your purchase. Write down, I am buying Microsoft at $300 billion because. Force yourself to write this down. It clarifies your mind and discipline. I just sit in my office and read all day. Buy a stock the way you would buy a house. Understand and like it such that you be content to own it in the absence of any market. All there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. Do not take yearly results too seriously. Instead, focus on 4 or 5 year averages. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Lose money for the firm, and I will be understanding. Lose a shred of reputation for the firm, and I will be ruthless. Only when the tide goes out do you discover who's been swimming naked. Predicting rain doesn't count, building the ark does. Cash is to a business as oxygen is to an individual, never thought about when it is present, the only thing in mind when it is absent. If you like spending 6 to 8 hours per week working on investments, do it. If you don't, then dollar cost average into index funds. Never invest in a business you cannot understand. Risk comes from not knowing what you're doing. If you don't feel comfortable making a rough estimate of the asset's future earnings, just forget it and move on. Buy companies with strong histories of profitability and with a dominant business franchise. We want products where people feel like kissing you instead of slapping you. I insist on a lot of time being spent, almost every day, to just sit and think. That is very uncommon in American business. The most important investment you can make is in yourself. One can best prepare themselves for the economic future by investing in your own education. If you study hard and learn at a young age, you will be in the best circumstances to secure your future. Read 500 pages like this every day. That's how knowledge works. It builds up, like compound interest. All of you can do it, but I guarantee not many of you will do it. In the 54 years, Charlie Munger and I have worked together, we have never foregone an attractive purchase because of the macro or political environment, or the views of other people. In fact, these subjects never come up when we make decisions. In the 20th century, the United States endured 2 world wars and other traumatic and expensive military conflicts, the Depression, a dozen or so recessions and financial panics, oil shocks, a flu epidemic, and the resignation of a disgraced president. Yet the Dow rose from 66 to 11,497. We've long felt that the only value of stock forecasters is to make fortune tellers look good. Even now, Charlie and I continue to believe that short-term market forecasts are poison and should be kept locked up in a safe place, away from children and also from grown-ups who behave in the market like children. Most people get interested in stocks when everyone else is. The time to get interested is when no one else is. You can't buy what is popular and do well. Don't get caught up with what other people are doing. Being a contrarian isn't the key, but being a crowd follower isn't either. You need to detach yourself emotionally. You are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right. For 240 years it's been a terrible mistake to bet against America, and now is no time to start. American business, and consequently a basket of stocks, is virtually certain to be worth far more in the years ahead. I won't say if my candidate doesn't win, and probably half the time they haven't, I'm going to take my ball and go home. After 25 years of buying and supervising a great variety of businesses, Charlie and I have not learned how to solve difficult business problems. What we have learned is to avoid them. Speculation is most dangerous when it looks easiest. Investors should remember that excitement and expenses are their enemies. Keep things simple and don't swing for the fences. When promised quick profits, respond with a quick no. Half of all coin flippers will win their first toss. None of those winners has an expectation of profit if he continues to play the game. What we learn from history is that people don't learn from history. There is nothing wrong with a know-nothing investor who realizes it. The problem is when you are a know-nothing investor but you think you know something. You only have to be able to evaluate companies within your circle of competence. The size of that circle is not very important. Knowing its boundaries, however, is vital. We believe that a policy of portfolio concentration may well decrease risk if it raises, as it should, both the intensity with which an investor thinks about a business and the comfort level he must feel with its economic characteristics before buying into it. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. I believe in giving my kids enough so they can do anything, but not so much that they can do nothing. If you're smart, you're going to make a lot of money without borrowing. If you buy things you do not need, soon you will have to sell things you need. You can't borrow money at 18 or 20% and come out ahead. Because if you're wrong and rates go to 2%, which I don't think they will, you pay it off. It's a one-way renegotiation. It is an incredibly attractive instrument for the homeowner and you've got a one-way bet. If you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. We have learned to turn out lots of goods and services, but we haven't learned as well how to have everybody share in the bounty. The obligation of a society as prosperous as ours is to figure out how nobody gets left too far behind. Bitcoin has no unique value at all. You're just hoping the next guy pays more. And you only feel you'll find the next guy to pay more if he thinks he's going to find someone that's going to pay more. You aren't investing when you do that, you're speculating. Stay away from it. It's a mirage, basically. The idea that it has some huge intrinsic value is a joke in my view. The difference between successful people and really successful people is that really successful people say no to almost everything. It's better to hang out with people better than you. Pick out associates whose behavior is better than yours and you'll drift in that direction. When you have able managers of high character running businesses about which they are passionate, you can have a dozen or more reporting to you and still have time for an afternoon nap. Conversely, if you have even one person reporting to you who is deceitful, inept, or uninterested, you will find yourself with more than you can handle. And so the important thing we do with managers, generally, is to find the 400 hitters and then not tell them how to swing. When stock can be bought below a business's value, it is probably the best use of cash. What is smart at one price is stupid at another. Among the various propositions offered to you, if you invested in a very low-cost index fund, where you don't put the money in at one time, but average in over 10 years, you'll do better than 90% of people who start investing at the same time. Just pick a broad index like the S&P 500. Don't put your money in all at once, do it over a period of time. It is not necessary to do extraordinary things to get extraordinary results.